All right. What is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, if you're new to the channel, definitely consider hitting that subscribe button below. That way you will be notified every time we go live and upload another video. Make sure to hit the little bell icon for that, of course. And I'm coming at you with a different setup today. I finally got the Tastyworks desktop platform downloaded and working just a few minutes ago, actually. The reason that I have this pulled up versus Thinkorswim is in the last half hour. I noticed this on Friday, but I didn't give it much thought because I figured I just typed something in wrong or something. But I tried to log into my Thinkorswim account on my laptop, and it keeps telling me that my information's wrong. And their support, for some reason, apparently is unavailable on Sunday. So I will not be able to get this worked out probably at least until Monday, if not even later, because support takes a lot of time for anything, it seems, over there. So we'll see how that goes. Overall, I mean, it works just fine on my phone and whatnot still. I have the little thing where you just sign in with your finger or whatever, but hopefully I don't get kicked out of there at some point. I don't know what's going on, but hopefully we get that figured out soon. However, I do pretty much have the same exact setup going on the Tastyworks platform that I do over there. I got my same DMI and everything. And you guys that are always wondering what my setup is, this will literally tell you. You can see I have volume, SMA. My MACD is 4, 10, 16. And then I got the DMI set at 10 as well, of course. But yeah, I mean, it'll take me a minute to kind of get adjusted to this overall. But we'll kind of see how it works out. I was using it for a little bit last time I was trading, just trying to use the same platform both with charting and executing the trades. That way you're not sitting there having to go back and forth, especially on the go on the phone, and make it much easier. Overall, a lot of people seem to like the Tastyworks charting. If you're wondering about that, a lot of people like it more than Thinkorswim. I think the only reason that I necessarily don't like it as much is just because I got so used to using Thinkorswim. It's much easier. It'll take a little bit, like I said, it'll take a minute for me to kind of adjust to everything. But I'm sure with time, it'll come and whatnot. Like, see this, I don't know what this means by save. Doesn't mean I can save the chart, I guess, so then I can post it into the group and whatnot. So just little things like that you'll learn as you go. It's just weird, the different kind of things that there are. They just randomly kind of pop up. So I'm learning as I go, of course, with this platform. But with that, before we get going, I just want to make sure the stream is up and going okay. Get this pulled over here. We got one of you tuning in so far, and it looks like we are good to go. So we'll go ahead and just hop right in. How's it going there, Mike B? You were right there. So it was a wild week, of course, within the markets. Let me see if I can get the right chart that I want pulled up. So we have the month to date chart pulled up. So about a 3-week chart overall pulled up. You can see we have been pretty sideways. We've squeezed out some new all-time highs recently, but we have been pretty sideways in between this range of, say, 33.25 to about a maximum other than our all-time high that we recently hit. We've been stuck in this 33.25 to 33.85 range for the most part. And we've had obviously a little bit of selling, quite a bit of selling over the last week roughly. I believe of the last 8 trading sessions, 5 of them, if I recall, have been red to some degree. So needless to say, we've definitely been pulling back quite a bit recently. And of course, Friday and I believe Thursday as well, we had some very heavy selling going on. Not yesterday. Friday was a pretty big day for the Bears. As for me, I took a position, like always, too early within the market. And you can see we are pretty down on that position. We got in at... Let's see the activity. Pull up the activity here. Got in too early at 33.62. The reason we did that is we saw a lot of bouncing around this 33.61-62 area. And those of you that watched, I believe it was last Sunday's. It was either Sunday or Wednesday. I believe it was Wednesday, actually. Wednesday stream. I said that I was expecting the market to probably come down when it opened up at 5 p.m. Central Time, the evening session. I expected it to drop to around like that 33.50 range. It dropped down to like 33.50, 55, somewhere around there. And then it found some support. It seemed like right around that 33.62. I believe it went up as high as like 33.68, 33.70. Came down and it was bouncing, kind of just going sideways a little bit for about 5 minutes straight, just right at 33.62, 33.63. So I went in and hopped in just because I felt like you can see exactly when I got in. It was 7:47 Central Time in the U.S. That'd be 8:47 p.m. Eastern Time. And then from there, the market just continued to drop. We can actually pull the chart back up here, go just to the specific day. Let's just look at the 1-day chart. Actually, you know what? Let's pull a 2-day, and let's do it in like a 5-minute segment. So we got in, what time was it? It was 7. So let's see. I'll pull our chart over a little bit. Let's see. So I said 7:47 p.m. So that was right around here. So like I said, you can see we came up. We were kind of just bouncing back and forth. Of course, I didn't have this exact chart set up. I didn't have the 50 SMA. I only had the 200 pulled up at the time. And I believe that was on my phone, if I recall. So I did not see that we were kind of bouncing around on the lower end of that 50 SMA, or I would have rethought that decision, of course. But then it obviously continued to go lower throughout the night. We did have a slight little retest of right around where I got in. This trade was actually profitable early on in the morning. When I first woke up, I was pretty much at break even. It was like at 33.61, 33.62.50. So I would have at least covered the commissions on the trade. But I kind of held it out just because I was like, okay, we are back above that 200 SMA. I was like, we'll see kind of what happens. And then, of course, pretty much open. It just kind of went to shit. And then from there, just continued to go lower, slowly but surely grinding out new lows throughout the day. We did seem to kind of find a little bit of support right around that 33, what was it, like 33.29, 28, somewhere in that range. But overall, I mean, we'll see what happens. I'm not like discouraged by any means. If worse comes to worse, I'll just look at rolling it into the next, what would that be? March, or no, not March. March is coming up now. The June, I believe, is the next one. Contracts, and we will just see what happens. I don't like having to hold a trade that long, especially when you could be potentially going into a correction, which is kind of the whole point of like the stream is like, are we going into a correction? What can we really expect? Obviously, corrections, bear markets, etc., always seem to be called out for what they are, either prematurely or after the fact. I don't necessarily think we're going into some massive correction, or definitely not a recession or a bear market, anything like that. Worst comes to worst, I think we might have slightly, I think the percentage that I estimated was around like 5 to 7% to the downside. We're already down, if I recall, 2 to 3%. I think it might be just over 2%, like 2.1% from like the all-time high. I might be wrong on that, but I know it's right around 2%. So we'd still have quite a bit of room to the downside, but overall, whenever I pull up let's just pull up the last 6 months here, and we'll just pull up a daily chart. When we just look at the daily chart overall, yes, we could fill this gap and come down to like 32.80. That is what I think like the max pain would be. And if you look at like where we're currently at, you're talking about what, roughly 50 point more move to the downside. That would be a little bit painful short term for me, of course, with where I stand and whatnot. Do I think we're going to come down that far? Honestly, I think they're going to draw the line in the sand right around that 33.15 level. You can see that act as a pretty hard resistance before we came down and filled the gap to the SMA. Here, it's my 50 if I recall. We filled the gap to that SMA. So I look for that to act as kind of like a line in the sand, right around that 33.12, 33.16, somewhere in that level. We're not too far off from that. We'll see kind of where the market is going to open here in a couple minutes. But like just where I'm at right now, I mean, it's like, why would you sell? Like, I mean, that'd just be ridiculous. Like, just hold it out. Worst comes to worst, just keep adding a little bit of money here and there to your account. Long term, it'll go back up. It's nothing to be worried about. The end goal is just to continue to profit. You can't profit if you're just continuing to sell at a loss, of course. Overall, I mean, this, if I did sell, it would be our first loss, and we essentially would be at break even overall. Would be very disappointed if I had to do that, but at this point, I'm just kind of playing it out. Like I said, I didn't see that you commented again, Mike. At this point, we're just kind of holding it out, and we will see what happens over the next trading week. Pre-bid is down. Yeah, I noticed that. I saw it's down to like 33, 25, 24 now. We'll see what happens. I expect a complete gap down, honestly. I knew it was either going to be a gap down or gap up. Looks like it's already opened when we are still a minute from trading. So apparently we just went live, and as you can see, we're down huge. 30 more points. So we will just have to wait it out, hold it out, and see what happens. Like I said, I think that 33.15 level should have acted as a line in the sand, but it looks like we are going to continue down and possibly tap that 3,300 level long term. So we'll see what happens overall with that. Let me see. Oops. Let's pull up here. We got 3 of you tuning in still. Wanted to make sure that we are still doing okay on the stream. And yeah, like I said, if you're wondering why I got like the Tastyworks platform pulled up, it's because my Thinkorswim platform has been messing up as of late. It will not let me log in, so it's been a disaster trying to deal with that. Let's pull up. I don't want to have the 6-month chart pulled up now. I want to have the 3-month overall, and we will pull up a 4-hour chart. So I mean, and you can see like our DMI is ridiculously low. So if we continue to just go down, which I expect short term, even though 3307 seems to be holding, our DMI and everything, just all of like the quote unquote indicators are just getting so overblown now. Again, like I said, I think within the next week or so, this stuff will kind of work itself out. If you just panic sell while you're down, you'll never make money at the end of the day. Let's take a look at the 1-hour chart too. My mouse is acting up. 1 hour down to 6.6. When we take a look at the 3-month chart overall, for the 1-hour chart, you can see like when your DMIs come down to around a 6 is where you seem to get a pretty good bounce, good sized rally. We're down to about 6.6 currently, and on our sell signal, it's up to a 45.5. It's been a long while since I've seen it at 45.5, since I've kind of been following the market again. You can see 45.5. We hit 50 actually. Earlier last week, we had a pretty decent little bounce, dead cat bounce really, but we had a good bounce, a little, what was it, like a 40-point rally off that low. We got down to like 33.39, came up to 33.72. So yeah, that was almost a 40-point bounce right there from the low. Do I expect like a 40-point bounce right now? No, probably not, but look for some kind of support to build in the near future. Again, you look at that 4-hour chart, 3.08 is the lowest it's been on the 4-hour chart in the last 3 months. It might even be the lowest it's been on the buy signal in the last 6 months. Let's take a look at the last year. We'll pull up year to date, and we will, I don't even have to scroll. It's the lowest in the last year, in the year to date. So in the last 2 months, I want to look at a year, not just year to date. So in the last year, wait for this to pull up. So 3.08 seems to be the lowest. Yeah. We came pretty close to, we had a 6.8. 6.8 seems to be the second lowest in the last year. So, yeah, I think it's a little bit overblown, but we'll see what happens. It's let's face it, it's based on the coronavirus. Don't know why my brother's calling me right now. It's all just based on the coronavirus at the end of the day. what happened with Ebola. It was around for a few weeks, and then after that, the market rallied from there. So, just frustrating times right now, but it'll pull through. Always does, always has. I wonder if there's a way. Oh, I'm on MES. Let's type in ES. ES on the 20-year. Of course, it's. So this seems to be something also that I do not like about this platform. So with Thinkorswim, you can pull up like a 20-year chart because it'll just show the S&P 500 in general. With Tastyworks, apparently, since it's showing the actual current contract that we are in, it's only going to show from when that contract is quote unquote. It's like at the beginning of the year was when this one went quote unquote live, not necessarily live. Obviously, you can buy, I think it's like 3 quarters in advance or something like that, but apparently they will not show. Wonder if I could just do SPY instead, because that'd be similar. SPY follows S&P 500, of course. When was Ebola? That was like 2014, wasn't it? Maybe it was I thought it was 14. It was between 14 and 16, I know. I wouldn't be surprised if this was around Ebola. All I know is around Ebola we had a pretty decent pullback, and then we continued higher. And the rest is history, of course. And obviously the bear take will be, well, we're so overextended now. Are we, though? I mean, yeah, we could fill this gap on a pretty massive correction down to 260, which on the S&P 500 would equal to around 2,600. This would be equivalent to like 2,630, if I recall. I'm trying to like do the math on what 260.30, 260.40 would be on the S&P. It might be 2604, 2605, but that'd be a pretty solid correction at that point. I mean, pull up the calculator here. Okay, so if we had, so it's at 33.48 as of now. So if you had say you filled the gap down to, let's just call it 262. So if you had 33.48 or 33.48 minus, what do we say, 262 would probably be where it would fill the gap. You're talking about a 71 point drop on SPY, which would equal to a massive drop on the S&P 500. Let's just see how crazy of a correction that would be from these current levels, divided by 3,348. You're talking about a 21.5% correction overall. Could it happen? Yeah, I mean, we literally just seen that, what was it, about a little over a year ago now, when we had that massive dump throughout the last quarter of 2018. Is it going to happen? Probably not. How often do we see 20 plus point corrections, 20% plus corrections? I mean, once you enter 20% plus, you're in a bear market technically. So that would be a pretty substantial claim to think we're going to go down to that. But what were you saying here, Mike? Let's see. Damn. YouTube messed with this comment section. I was thinking 32.95. Yeah, that definitely would not be unreasonable to think, for sure. I mean, especially at this point, it's down to what, 33.04. So I mean, you're only about 9 points from where we're currently at. Before it continues higher, definitely painful to look at. Not gonna lie. But that's the game you play, and that kind of transitions into what I was also going to mention. I mentioned in the description box, like just kind of like what we're going to talk about here, which is when it comes to trading, future specifically, but really any type of trading, investing, that kind of thing. Whenever you're playing around with smaller money, I mean, you're talking less than, in my definition of smaller money when it comes to investing is anything less than realistically 20, but at least $10,000. When you're playing with less than $10,000 to $20,000, you're playing with relatively small money. Obviously, thousands of dollars, that's a lot of money. That's more money than what most Americans even have in their savings account. But whenever you're talking about trading, and like you're trading something like a micro E-mini futures, specifically, not necessarily the E-mini. The E-mini, you can definitely be much more tactical with your trades and just be in and out really quickly. Like we were talking about, I think it was last night actually, 2 points, that's $100 on the E-mini, just ES. For those of you that don't know the difference between like E-mini, micro. Micro is 1/10 the size of E-mini, of course. And that's the thing. We're trading with the micros, 2 points, that's $10 after your huge fees and commissions, which we say huge just because like Tastyworks has some of the cheapest commissions, but it's still $2.74 or 75 cents, something like that, for the complete trade. Looks like we're coming up on your target right now, might be. But 2 points, that's $10 after fees and commissions. That's going to eat almost 30% of that profit. Whereas 2 points on ES, that's $100. Even if you're paying, it sounds like a lot of companies and whatnot, brokerage firms charge somewhere around $4 to $5. Sometimes a little bit more, usually between that $4 to $8 mark. Let's just say $8. Go on the high end, super high end. If you're paying over $8, you might want to look at other brokers. But let's just say $8 for the hell of it. Say you have 2 points, $100. After fees and commissions, you're left with 92. So it's taking literally 8% of your trade versus when you're trading the micro, 2 points, and they're taking 275. That's 27, almost 30% of that trade. So you have to be very, very, very more patient, tactical, not just look for 2 to 4 points. I mean, anything north of 4 points, I always say it's not bad to cover profit. Because even on the micro, 4 points, that's $20 after fees and commissions. It's still somewhere around like 17. So I mean, you're still profiting a little bit of money. $17 on a $700 investment, that still isn't bad. I mean, it's not great, but when you're talking just a quick little 4-point trade, that usually occurs within minutes if you're trading during the day. 17 divided by the price right now is like 726 if I recall. That's 2.3% on your money. So I mean that's not a bad trade for sure. But like you just got to be a lot more patient. Where with the E-mini, if you have any hesitation at all, we're like, man, I'm up 2 points, I'm up even 1 point, $50. You're still gonna come out with $40 to $45 after fees and commissions. You're much more likely to go ahead, just take your 1 to 2 point profit and just keep it moving, consistently doing like 2, 5, 10, 3, 1, just little point, almost like scalping to a certain degree. You're more likely to scalp than you are with the micro, which is really where I'm at right now. Like, I'm pretty much just buying these, holding them until they are making a good amount of money, and then once they finally make a good amount of money, and my version of good amount of money again is anything north of 3 to 4 points. If I'm up 3 to 4 points and I start to feel a little skeptical, I cover my profits. I mean, you guys seen my trades from the last week and going on second full week now, so about a week and a half. The last week and a half, my highest trade was like 10 points if I recall, 10 or 12 points. While the lowest one was somewhere around 3 or 4 points. So I mean, I'm constantly covering between that 3 to 10 point range for the most part. Just because, again, I mean, if you're up 10 points on the micros, that's $50. That's after your fees and commissions going to be, let's just call it 47. We'll just call it $3 for fees and commissions, even though it's $275. But $47 divided by your $726 investment, that is a almost 6.5% return on your money on just one trade. So again, you got to keep in perspective of just keeping it in terms of just percentages and ratios. Again, think about the ratios. If I was up 10 points on MES, or on ES, that's $500. It's only 50 or 47 right now. But if you just continue to do 5 point, 10 point, 12 point, 4 point, any amount of profit, and just continue to roll that over and over and over. Your account will eventually grow. But you can't grow, it won't grow if you just panic sell because, oh, well, the market's throwing a fit about a damn virus. That's not even going to be a story a couple weeks from now, maybe a month at the most. I give it till the end of March. If it's around by the end of March still, then yeah, we're going to have a big problem. But we've seen this before. It's like I said, I call it Ebola 2.0. I wish I had gotten in at a much, much better price. I should have stuck to my guns. Even if I did, though, I mean, it would have only helped me by roughly 10 points, essentially. So I would only be down about $50 less, essentially, than I am right now, which, big picture, doesn't make a huge difference. But we will just have to sit and see kind of what happens over the next week. That's kind of where we're at overall. I think overall, based on where we're at right now, you're definitely pretty spot on, might be, with the 295. We're hovering right around there right now, which I agree. I think we'll probably hover right around that 32. A lot of people are saying 32.88 was the number I was seeing. I think we'll probably finally find some support around that 32.88, 32.95 level. And then we'll, of course, every time we get overblown like we were saying, the DMI on the 4 hour is the lowest it's been in over a year now. So we're definitely going to get some sort of a little rally, even if it's a quote-unquote dead cat rally. I think we'll at least probably come up, retest those 33.40s, 33.50s probably. Originally, I was expecting after Thursday and Friday sell-off for us to hit that 33.60, 33.74, I think was the target. That was my actual target, was 33.74. That's where I believed we were going to end up recovering to before potentially going down to where it seems to be we're going now, which is 32.88. But now, since we're already heading there, I'm adjusting. I think we'll probably, on the next green day, we'll probably hit somewhere around that 33.40 to a max of probably 33.57. That seemed to be a pretty solid support early on. What was that? Thursday night's trading session. I believe 33.57 was holding fairly well, and then that's when it kind of just caved in and collapsed. So that's where I think we'll probably get. And if it gets up to that range and it doesn't look promising, then I'll probably go ahead and sell at that point. Say it's at 33.50, 33.57. I would probably at that point go ahead and cover or cut the losses at that point. It would be roughly a 5-point loser at that point, which after fees and commissions would be like a $25 or $30 hit. But overall, we'd still be up. What would that be? Around $100 roughly. Since starting just over a week ago. But yeah, definitely couldn't have happened at a worse time. I was literally we were discussing on Wednesday exactly when would be a good time to start rolling into the next contracts, because we are just over a week. I believe it's a week from Tuesday is when the contracts for the futures market for the March contracts will close. I think it's March 3rd, if I recall. It's pretty much the 3rd of every month, if I remember right. So, couldn't have happened at a much worse time. This little hiccup in the market always seems to be a coincidence. Either the market seems to shoot way up or seems to go way down at the end of these future contracts. So, going forward, what I will be doing whenever, like trading the micros, trading any type of future for that matter, is when we are within 2 weeks, probably 2.5, but for sure within 2 weeks of the closing date of the contracts, I will personally be going. I won't wait for the brokerage firm to say, hey, you have to go into the next contracts. I'll just do it myself. I'll just type in, there's a different code, each one, like for ES or MES right now, it's MESHO. I don't remember what June's will be. I think it might be Z. Or no, I think Z is December. But they each have their own little letter difference, and that's how you would just search it up. You can check out the CME Group's website for that as well if you kind of want to learn more about that, how to roll early versus kind of crossing your fingers and hoping that the trade plays out. And that's another thing we could get into. I might even go deeper into that on Wednesday's video. For those of you that are new, of course, we do these every Sunday, and in between Tuesday and Thursday, I post another stream. We go live just kind of for a midweek market update, talk about where I'm at, talk about where the market's at overall. We discuss in the chat or whatever any questions you guys have. And of course, if you have any questions today, feel free to shout them out, or any thoughts or anything like that. But like I said, subscribe definitely if you haven't already, so you won't miss those. But on Wednesday, we'll probably dive more into that. But just in short, if you're worried, like, oh man, I'm down on my contract, like my position, for example, like I'm down pretty big on my contract. I'm obviously not going to sell here. What do I do? So essentially, you'll end up having to roll into the next contract. You will take a quote unquote, it's like a, what's it called, like a settlement. So you're in a loss still, but of course you end up yeah, that's what I was just about to get into. So like, say you're down on your position and it's time to close, they'll literally tell you, it's like, I think most brokerage firms do it like a day or two in advance. I haven't either, might be, and I'll probably handle mine myself. You can literally do it yourself too, guys. Like if you wanted to go ahead and roll tonight, for example, say you're like, you know what, I don't want to worry about it, I just want to go ahead and roll. I wouldn't personally this late in the game. You might as well wait it out, wait at least till Friday to do so. But if you do, you can always do that. You can click the option roll, and then at that point you take a what's it called, like a realized loss. So I mean, you're still quote unquote taking a loss, but you're not in the sense that it's rolling into that next contract. And of course, as it goes up, you're like making your loss back. Because either way, I mean, you're still quote unquote losing even as you continue to hold the trade. It's a loser until it becomes a winner. Duh, math, of course. But yeah, that's kind of how it works. It's kind of like the whole deal where it was, like I was explaining in, I believe it was Wednesday's stream, where it was showing settlement price, and then it was showing where the market opened up. It was like saying realized profit or loss. How it said, like, one day it showed like minus 54 or something like that, and then the next day it showed plus 75. That's because when the market closed, my realized loss based on the settlement was $54, and then when the market opened and I closed the position, the realized profit for that specific trading day was 75, and then the profit overall obviously ended up being like $25 or something like that. But yeah, it gets complicated. It's hard to explain overall. But yeah, that's obviously more than likely what I will probably be doing at the end of this week. Unless if, like I said, I mean, this is obviously a hiccup. I mean, we're literally now 100 points, pretty much dead on actually, 100 points off the high. So 100 points off of, what was it, 33, I think it was 33.97.50 if I recall, was the new all-time high we hit briefly. So we're down about 3% from that. So definitely a little hiccup in the market for sure lately. We're pretty much dead on that right now. Which tends to be where a lot of our hiccups, pullbacks tend to fall. They tend to fall in that range of, I don't know what that was. It might be the Tasty Work saying people making trades. But 3%, we usually fall in between that 2 to 5% pullback whenever we have these, not corrections, but we have these pullbacks. Definitely a good buying opportunity. I mean, if you haven't bought into anything recently, like within S&P 500, Dow, whatever you tend to invest in or go long in, so to speak, I definitely think it's a great buying opportunity. Do not go long on the contracts that are expiring in the next week. Don't do that to yourself. I would definitely go long in the next contracts if you're looking at buying a futures contract. But I definitely think overall this is going to end up being a good buying opportunity. We'll probably by the end of March probably end up at 3,400 plus, depending on how long this corona stuff gets drug out. Like I said, my own 2 cents, my prediction is probably by like March 10th, March 15th, we probably won't even hear anything else about coronavirus. It'll still be kind of something they bring up here and there about, oh, cases have dropped, people are recovering, like that kind of thing. But I don't think it's going to have as huge of an impact economically as everybody's thinking. We know how these things tend to go. the media overblows and overdoes everything, and it usually ends up not being a big deal. I mean, let's not forget, everybody was shouting recession when we were down 2022. What was it, 22, 24%? We were down at the end of 2018. And then last year, the market rallied like 30, 40%. So always take what the media says with a grain of salt. Well, actually, we got down to like 32.93 if I recall. I think it was 32.92. That was just as I was looking over here. I'm just kind of keeping an eye out on our price movement, but I think we got down to 32.92, so that's actually 105 points roughly that we came down, divided by 3397.5. So yeah, we're actually down just over 3% technically, even though we barely touched it. We touched it briefly. Still, we came down just over 3% from the all-time high. So again, I mean, really a good, solid, healthy pullback in all honesty. Never like to see them, of course, but it's all part of the game, of course, all part of the market. But like Warren Buffett and all of them, like every great investor always says, you only lose, you only get hurt. The best analogy I heard when it came to the stock market is you only get hurt on a roller coaster if you jump off while it's going full speed down the hill. So same thing applies with the stock market. You only get hurt if you decide to jump off while everything's going down instead of adding to your position, which again goes back into our concept about the downsides of trading with the small account, only being able to trade one contract at a time versus two or three. Like if I personally had enough funds in my account to go ahead and buy another contract, I would definitely be buying a contract right now. Seeing that it's holding pretty well at that 32.95 level, like Mike B called out, which was a great call out, by the way. He called that out when we were around like 33, what were we at, like 33.07 or 33.12 early on. I would definitely be buying another contract right now. But I only gave myself, that was my agreement to myself, I'm only going to give myself enough money up front to just trade one contract at a time. I think it definitely helps you improve as a trader because you start to see things that you didn't see before. When you're paper trading, it's easy just to average down with another one or two contracts. That kind of thing. It pretty much nothing teaches you more than using your real money at the end of the day. Like I knew pretty much anyone in our Discord group chat even saw that too, which by the way, if you're not in there already, the link's in the description box. It's totally free to join. Don't charge for anything associated with this channel, of course. There's like 130 or so of us in there now, but those of you that are in there knew, like I even pretty much called it. I was like, watch, I'm going to get in and it's probably going to drop at least 5 points roughly. My trades seem to always do that. I always tend to get in slightly too early. I didn't think I was going to get in 50 points early, or 60 now, 60 points early, anything ridiculous like that. But sure enough, it came down a little bit. And you start to just notice things like that. Like, okay, if I'm thinking this is a good time to get in, I should probably wait a little bit longer, see kind of what plays out. I'd rather get in just a little bit too late, miss a couple points, but catch it as it continues to go up versus try to catch a falling knife, so to speak, if that makes sense. So you start to just kind of learn. It's hard to explain. Anyone that's trading with cash probably knows what I mean, especially anyone that started with a small amount of money and just slowly built their account the way that I'm trying to do. So, like I said, I'm going to put a little bit of money here and there in throughout the year or whatever. Nothing major. I'm not going to like drop thousands or anything ridiculous into my account at all. But eventually, here in the next few months, we'll get to the point where we can trade 2 contracts at a time, and I think that'll help big time because I would definitely be going long right now. And just think, if you were able to average down, and if you don't know what averaging down means, it just simply means like, okay, I'm in at say 33.50, the market's at 3300. If I go ahead and go long on another contract at 3300, which is pretty much where we're at right now, my average cost is at 33.25. So the good thing with that is okay, once I get up to 33.25, I'm essentially at break even because my contract that I bought way down here has made up for the loss that this contract way up here did. Just a little crash course there. But it definitely helps out a lot because, like I said, chances are the market's going to end up coming back to at the minimum 33.40, probably closer to 33.45 again at the minimum. I'm still expecting probably realistically 33.50 to 55, maybe even that 57 level. And that's just in the next few trading sessions. I don't mean like in the next month or anything. I'm talking like within this week. I think we're probably going to hit that. That's reasonable. I mean, it's only 40 points from where we're at right now. So, say you went ahead, bought another contract, and your average cost in that example is 33.25, or in my case, it'd be like 33.30. And say the market came up to the minimum that we're expecting it to, which is probably 33.40, you're actually going to end up a little bit overall. You'll end up somewhere around an average of about 4 or 5 points overall on your trade. So versus where when you're trading one contract, you're still down overall on your trade by 20 points, still roughly $100. So you went from with one contract being down roughly $100 to just by making up a little over half of that, you're now in the profit by about $25-$30. And that's just with 2 micro contracts averaging down in this instance. So I think definitely if you can hold out on like trading or whatnot, try to build up your account a little bit. I definitely suggest trying to put enough money in your account to be able to trade 2 contracts. What would this be? Obviously, the bare minimum you'd be able to have in your account would be somewhere around $1,455, something like that. Of course, I would not suggest that because then you have no wiggle room at all. You'll be in a bad situation with margin calls and whatnot if your position just goes totally against you or whatever. Which of course you don't want a margin call. That's never good. So I would suggest if you need roughly, we'll just say $1,450 for the trade for 2 contracts hypothetically, I would suggest having roughly $1,800 to $2,000 in your account, just because again you have that buffer. Say you put $2,000 in there for easy numbers, that's $500 a buffer. That means you could literally go down 100 points essentially on your trade, which is about where the market's down right now. The market's down a little less than 100 points now, but at the lows of tonight, the market was down about 103 points, was it? We were down about 103 points from the high that we just hit. Keep in mind, I think it was last Tuesday, either last Tuesday or Wednesday, we had just hit a new all-time high of 33.9750, and the market came down all the way to about a little bit ago, 32.93, I believe it was. So it was about 103 to 105 point drop in less than a week. So I mean, it can happen. You definitely want to have that collateral there. So yeah, if you're looking to trade 2 contracts, I would suggest having a minimum of $1,800, probably closer to $2,000 in your account. At that point, you have some options. You can go long on a contract, and if you happen to get in too early, like a lot of us do, you have that equity there to go ahead and average down on your position. Don't average down too soon. The only time I would even consider averaging down is if your position's down more than probably 20-25 points. If you're down 10, I mean, you're not down a lot. You're down $50 on a micro. Obviously on an ES, you're down 500 in that case, which if you're trading ES, you know better than to let yourself go down 10 points, of course. But with micros, of course, you have a little bit more wiggle room because you're not playing with big money. ES, we can do a whole nother video about that sometime, just like with stop losses and target profit, all that stuff. But I'm not really going to speak a lot on that because I'm not doing it. I'm not trading ES right now. Whenever I start trading ES, hopefully in the next year or so, we will definitely be talking about that a lot more. But yeah, gloomy times at the moment. So Hopefully our stream has been doing okay on our quality. Shows we're still green and whatnot, so that is good. But yeah, like I said, we're down pretty hefty right now on this current trade. What do I expect for this week? I'm probably going to go ahead and wrap the video up soon. I pretty much hit everything that I wanted to for you guys. Unless if you guys have any questions, get you guys pulled back up there. Unless if you guys have any more questions, feel free to shout them out there. But what do I kind of see for this week? I expect us, as for tonight, to probably retest that support that we seem to have built around the 32.95 level that might be called out perfectly pretty much. We're hovering right around 3,300 right now, 33 to 33.02 at the moment. But I expect us to revisit the 32.95 a couple times, just kind of do a little bit of this throughout the night. Wouldn't be surprised if we even break that and might even try to touch that 32.88, 32.87 level that a bunch of other traders are calling out as the ultimate floor, so to speak. But honestly, I mean, there's been so much selling. I don't see there being a whole lot more selling as for tomorrow. There could be, but I don't really see there being a whole lot of much more selling than where we're at tomorrow. But who knows? As for the week as a whole, I expect us to obviously be down pretty big tomorrow. Would be hilarious if they reverse this shit overnight. We've seen it happen before where we're down pretty big in the overnight session, and then you wake up and by the morning bell it's green and up by 0.2%, something ridiculous. I don't think that's going to happen. It's unrealistic. But I expect us overall be down pretty big tomorrow like we are currently. I expect us to probably end the day somewhere around that 33.15 mark that I was talking about earlier in the stream. And then I expect us at some point, probably by Wednesday or Thursday, to retest that 33.40, 33.60, somewhere in that 40 to 60 level. And then at that point, depending on how we look, what the news, what the Corona and all, Corona is going to be the biggest thing this week. The market's made that pretty clear. It's been the thing the last week or so. It's the only reason really we're even pulling back. Makes you wonder, but like I said, I expect us to kind of be in this range this week between a floor of probably 33.88, it looks like, to a maximum of probably, if we get lucky, if the bulls get lucky, a maximum of probably 33.75. It's going to be a pretty crazy range this week, I believe. Like, you might even see lower. You might even see that 32.50 level might come up, 32.50 roughly. 32.50 to 33.50 is kind of what we're seeing, kind of what I'm thinking overall for like a max high, max low. If we get some crazy rally, 33.75 at the max, but that's kind of, I'm even thinking that's kind of unrealistic at this point. If we can end the week overall above 33.50, I think that'd be a win for the Bulls. I think at that point there would be some more buying coming in from the big boys at that point. So from there, we'd probably continue to go higher. And then, like I said, I expect coronavirus to be a no-go story probably by the middle of March at the latest. I said March 10th to 15th at the most. That's roughly 2 to 3 weeks. So we'll just kind of see what happens. I heard there was a couple, like very, very few. I heard like 2 or something cases in Italy. I think it was northern Italy, if I recall. So prayers for anybody that's dealing with that right now across the world. But overall, I think it's something that's kind of being overblown from an economical standpoint. We always hear about the worst of worst. We never hear about the best of best. And the best of best seems to always happen time and time again. That's why the market continues to go up long term, like we always say. So, dogs are freaking out now. Perfect timing to go ahead and end the stream. So, hopefully you guys had a good week. We had a good week up until Thursday night. We pretty much reversed all of that. And then some, like I'm sure a lot of longs are setting at the moment. We're just sitting around waiting for the most part, and we will just have to wait it out and see what happens. Like I said, we will do another live stream probably between Tuesday and Thursday. For the most part, I'm thinking probably Wednesday or Thursday, but Tuesday at the earliest. So like I said, if you haven't already, hit that subscribe button. We'd love to have you here. Make sure to hit the bell icon beside it. That way you will be notified every time we go live or upload another video. And then of course we'll have the same Sunday stock watch. I try to do it 30 minutes to an hour before market open. Like I said, today got kind of mixed up because I'm having issues with signing into Thinkorswim for some reason. So I will definitely keep you guys posted in Discord. That's another thing. If you're not in there, the link to that's in the description box. It's, like I said, it's free. I don't charge for anything associated with this channel. It's just a little group that we have of a little over 130 members now, where we just discuss our trades, kind of what we're seeing in the market, and just looking to bounce ideas off one another at the end of the day. So I'll definitely keep you guys posted in there. And then, like I said, we will be live again probably in the next few days. So hopefully you guys are going to have a good week this week. Keep on going out there and making your profits, covering your profits, and achieving your financial freedom this year. And like I said, I'll see you guys in the next couple days. Till then, take it easy, guys.